Hello friends, welcome to Finnobo. History is full of sudden collapse of currencies. Many countries like Argentina, Germany and the most recent Venezuela have already faced currency collapse. The question that arises is, how does a currency collapse? Can US dollar also collapse, and what shall be the effect worldwide if US dollar collapses? Let us take the answer. A currency collapses when it becomes unable to perform its basic functions like being a medium of exchange and a store of value. See, if people start believing that their currency is unstable and not useful, then no one will use their currency to store for the future use. Also, people may start looking for another currency to trade, because if you trade in a currency which is very unstable and shedding its value day by day, then what will you do with these currencies in the future? Also, a collapse could not just occur without a triggering event. The triggering event may be hyperinflation or the rapid depreciation of currency in the international markets. US economy is seen as the strongest economy in the world. Investors trust that US government will back its currency. Therefore, 61% of the foreign currency reserves of all the central banks all over the world are in US dollars. The dollar's strength is based on its use as the world's reserve currency. For dollar to collapse, there must be two conditions in place. There must be weakness in the value of the US dollar, and there must be a viable alternative currency. Between January 2008 and 2020, the dollar has gained nearly 30%. The coronavirus pandemic has made it a further 10% stronger. But in the last 1 month, US dollar has started depreciating. It is not that the US dollar is on the verge of collapse, but yes, it is depreciating a lot. Also, there is not any alternative viable currency for everyone to buy. The next most popular currency after the dollar is the euro, but it comprises only 21% of the central bank reserves. China and Japan together own more than $2.3 trillion in the form of treasury notes. If they start dumping their holdings of treasury notes, it can cause a panic leading to collapse of dollars. But they may not do so because China and Japan peg their currencies yuan and yen respectively to the dollar. This keeps the price of its exports to the United States relatively cheap. The economies of China and Japan are dependent on US consumers. They know that if they sell their US dollars, their action would further depress the value of the dollars in the international market. As a result, their products, which are still priced in yuan and yen, would cost relatively more in the United States. Because the product becomes relatively costly in the United States, their demand would suffer. As a result, their economies would also suffer. So for now, it is in their best interest to hold on to their dollar reserves. Hey, the dollar collapse is not coming any soon. But for now, let us imagine that somehow Japan and China do not hold on their dollar reserves and start dumping. Let us see what shall be the effect. Because dollar is losing value, a weaker dollar will buy less foreign goods. This will increase the price of imports. As a result, inflation rate would also increase. The value of dollar is one of the three factors that determine oil prices. Oil and other foreign contracts are denominated in dollars. A weaker dollar will drive up the oil prices. Also, because exporting countries need to maintain their profit margins, the price would also rise substantially. On the plus side, a weakening dollar helps US exports. Their goods will seem cheaper to the foreigners. This will boost the United States economic growth, which will attract foreign investors to the US stocks. But if enough investors leave the dollar for other currencies, it could cause a complete dollar collapse as well as the collapse of the complete financial system. A sudden dollar collapse would create global economic turmoil. Investors would rush to other currencies such as euro or other assets such as gold and other commodities. Demand for treasuries would plummet and interest rates would rise. There are many countries that presently use dollar as one of their official currencies. After a crash, the country having greater link with the US dollar shall suffer greater loss of economic freedom. Such countries would also have the option of switching from dollar to another dominant currency like euro or Chinese yuan. Adoption of a currency such as euro or yuan would require a sudden switch in the monetary policy. As a result, the country may also face monetary problem. The overall financial system of the world will suffer if dollar collapses. Hey, this was our view. Why don't you share your views in the comment down below? Finally, this video ends here. I hope you liked this video. Don't forget to share this video with your friends and subscribe to Finnobo for amazing new videos. That's all for the day, and I will see you in the next one.